We all believe that this euphoria is going to carry us with Trump, and there's no, all of the craziness is behind us, all of the debt is behind us, all of this bad stuff is behind us, so the market can go forever. Yet the insiders are bailing, and Warren Buffett's sitting on over, $40 billion in cash.
When bond yields start rising, equities go with it. They go into new high ground. But there comes a point, perhaps after a bit of a pause, where there's another wave of rising bond yields, and it's that kills the equity bull. We're going to see that, I think, in 2025.
When this whole thing goes down, mark my words, the great taking is very real, and a lot of people, a huge amount of people, are going to be left with nothing.
You're watching Silver News Daily. Subscribe for more.
Did you know that central banks worldwide are hoarding silver at record levels, all while quietly preparing for an economic storm? And here's the kicker. What they're doing could reshape the financial landscape for decades. Sounds dramatic, right? But stick around, because we're diving into the facts they don't want you to know. And trust me, they'll want to hear this before it's too late.
All of these things that are just ridiculous are dying and are being, the curtain's being pulled back. I think this year there was a sea change in, I guess I'll use the V word. The V word has been exposed for what it was. So, that's a good thing that the curtain got pulled back on that. From a financial standpoint, this year the U.S. paid over $1 trillion in interest only. And this is the year, I think, where the math is just starting to bite the system. The math is completely untenable, meaning the U.S. is insolvent and the U.S. issues the world's reserve currency. So you have a world's reserve currency issued by an insolvent. So I think that's very important. Yes, I absolutely agree. The change of administration is important, but I also would caution, just because of some of the things they're already talking about, the Noahide laws, I think early in this administration, we're going to find out that the First Amendment is going to be under attack. I know that sounds strange because of all the censorship that we've had in the past. But I think early in this administration, we're going to find out. The real nuts and bolts of the Trump administration. I'm not really happy with several or quite a few of his cabinet picks. And I also believe that the world is going to figure out that, in Trump, nobody can fix what's already been done because it's math, and the math it's already in the oven and on fire.
Silver, often overshadowed by gold, might just be the most critical metal of our time. Let's break it down. Right now, silver isn't just for jewelry or coins. It's the backbone of the technology shaping the future. Think solar panels, electric vehicles, and even advanced military systems. Experts project that by 2025, electric vehicles alone will demand 90 million ounces of silver annually. That's just one industry. Solar energy, which has already skyrocketed in global adoption, requires silver as a key component for photovoltaic cells. Without it, renewable energy technology simply doesn't work. And here's the twist. While the demand for silver is exploding, mining production is struggling to keep up. Reserves are depleting faster than anticipated, and major mining regions are facing labor strikes and supply chain disruptions. Analysts warn that we could face a severe supply crunch within the next 2 decades. Some even estimate that at this rate, silver reserves might be exhausted within 20 years. But this isn't just about industry. Silver is becoming indispensable for governments and economies transitioning away from fossil fuels and traditional currencies. For instance, the U.S. military depends on silver for 95% of its advanced weapons systems. Samsung's groundbreaking solid-state battery, which boasts a 600-mile EV range, also hinges on this precious metal. Here's what's really shocking. While all this demand builds, the price of silver remains suppressed, hovering far below its true potential. Experts suggest this won't last much longer, as central banks and institutional investors scramble to lock in their positions. The retail market may be left out in the cold. So what do you think? With silver at the heart of so many crucial industries and a supply crunch on the horizon, could this be the metal of the decade? Let me know in the comments, and don't forget to hit subscribe so you don't miss the next piece of this puzzle.
At a ferocious pace. They're not stopping their accumulation. They're just being a little bit more clandestine about it, if you will. They're being less transparent, less forthright, less open, and the import-export numbers coming out of London and Switzerland are somewhat paying reference to that. Of course, that's a big deal, right? But maybe not as big of a deal as a change in administration, of course. And I think most of us here would say we feel blessed that Trump has won the election, and that we'll transition into hopefully getting our culture back. We've lived through 4 years worth of bizarro world where everything that all of us who I think thank God every day without putting words in your mouths that we were born in this country that gave us the opportunities that it did, where we worked hard and our merit was something that was valued rather than our lifestyle, where we didn't have to worry about walking the city streets at night, where election integrity, the integrity of our pillars of our society, the FBI as an example, the judicial system, all of these things just went haywire. And so for me, it's a real big deal, huge deal that we are moving in the direction of getting our culture back. And I think that to me is more important than just about anything else financially. So for me, the two big deals are not only a continuation of the rampant purchasing by the central banks, but actually a doubling down as we get close to the end of the year, and bringing Trump on board to restore sanity to our culture, to the things that made Americans feel special about being an American. To me, those are the two things that stand out more than anything.
Now, here's where things get even more interesting. Central banks around the world are playing a high-stakes game of chess with silver and gold, and most people don't even realize it. Countries like China, Russia, and India are aggressively stockpiling precious metals, but they're not exactly advertising it. In fact, much of this hoarding is happening under the radar, bypassing traditional reporting channels. Why? Because these nations know something critical. Fiat currencies are losing their value, and tangible assets like silver are becoming the ultimate edge. Take China, for example. In the past year alone, they've quietly accumulated over 1,000 tons of gold and a significant amount of silver. But here's the kicker. They're doing much of this through unconventional methods, such as buying directly from miners and refining the materials themselves. This means a large portion of their purchases aren't being recorded in official statistics. And they're not alone. Saudi Arabia and India are employing similar tactics, importing and stockpiling metals without reporting it to international organizations like the IMF. Why this secrecy? Because openly acknowledging these massive purchases could send silver and gold prices soaring, disrupting their carefully laid plans. And it's not just about investment. Central banks are preparing for a possible systemic shift in the global financial system, one where precious metals could regain their role as the backbone of monetary policy. Think about this. If central banks are hoarding silver and gold while quietly offloading U.S. Treasury bonds, what does that say about their faith in fiat currencies like the dollar? The implications are staggering. These nations are effectively insulating themselves from the economic instability that's brewing in much of the Western world. But here's the real question. If central banks see the value in silver and are taking these extraordinary measures to secure it, why isn't the average investor paying attention? Could this be the opportunity of a lifetime? Drop your thoughts below and stay tuned, because in the next step, we'll explore the growing debt crisis.
Jeff
and its
Bezos has sold
potential to
another
reshape the global
1.25 billion
economy.
worth of Amazon in
Hey,
November, bringing his
Don't
total
forget
up
to
to
hit
almost
that subscribe
13
button so
billion
you don't miss
for
what's
the
coming
year.
next.
Zuckerberg cashed out 153 million worth of Meta stock last month. That brings him up to 2.4 billion over the last 12 months. And insiders in NVIDIA have sold over 2 billion year to date. And so, as Bill was saying, you have the insiders. Right now, it's a 6-to-1 discrepancy between insider buying and selling. You have 6 sellers on the inside for every 1 buyer. And this is at a period of time where over half the country feels that there's less than a 10% chance of a market crash. So you have the insiders leaving, and you have this irrational exuberance by the public. And I know that we've already closed this door, but I just found what I wanted to mention. You know, China said they went 6 months without buying anything and then bought 5 tons in November. The London import-export number said they bought 60 tons in September and 55 tons in October. They never reported it. So not as your eyes lied to you, I think, is what we're really trying to get at with a lot of this stuff, whether it be the strength in the marketplace, where we all believe that this euphoria is going to carry us with Trump, and there's no, all of the craziness is behind us, all of the debt is behind us, all of this bad stuff is behind us, so the market can go forever. Yet the insiders are bailing, and Warren Buffett's sitting on over, $40 billion in cash. The same thing is true about the numbers that we're being told by the IMF, how much gold is being accumulated by the central banks. And they're using the Western suppression to run cover for it. And that's a prime example. China says we didn't buy anymore. That's 115 tons unaccounted for that they did buy over 2 months. That's just 2 of the 6 months they said they didn't buy. Anyways, I think that's kind of a common theme, is that what we are seeing is less than, at best, it's truth. And I think at some point, we have to start to see these things come together where, the logic and the truth has to reflect in price, has to reflect in outcome. So yeah, it gets maddening, I'm sure, for people to listen to this stuff over and over and over again. But at some point, reality has to, the rubber has to meet the road, I guess, is what I'm trying to say. Maybe that happens this.
Now, here's where things get even more interesting. Central banks around the world are playing a high-stakes game of chess with silver and gold, and most people don't even realize it. Countries like China, Russia, and India are aggressively stockpiling precious metals, but they're not exactly advertising it. In fact, much of this hoarding is happening under the radar, bypassing traditional reporting channels. Why? Because these nations know something critical. Fiat currencies are losing their value, and tangible assets like silver are becoming the ultimate edge. Take China, for example. In the past year alone, they've quietly accumulated over 1,000 tons of gold and a significant amount of silver. But here's the kicker. They're doing much of this through unconventional methods, such as buying directly from miners and refining the materials themselves. This means a large portion of their purchases aren't being recorded in official statistics. And they're not alone. Saudi Arabia and India are employing similar tactics, importing and stockpiling metals without reporting it to international organizations like the IMF. Why this secrecy? Because openly acknowledging these massive purchases could send silver and gold prices soaring, disrupting their carefully laid plans. And it's not just about investment. Central banks are preparing for a possible systemic shift in the global financial system, one where precious metals could regain their role as the backbone of monetary policy. Think about this. If central banks are hoarding silver and gold while quietly offloading U.S. Treasury bonds, what does that say about their faith in fiat currencies like the dollar? The implications are staggering. These nations are effectively insulating themselves from the economic instability that's brewing in much of the Western world. But here's the real question. If central banks see the value in silver and are taking these extraordinary measures to secure it, why isn't the average investor paying attention? Could this be the opportunity of a lifetime? Drop your thoughts below and stay tuned, because in the next step, we'll explore the growing debt crisis and its potential to reshape the global economy. And hey, don't forget to hit that subscribe button so you don't miss what's coming next.
I do want to add to what Andy was talking about. Absolutely, you've got China trying to buy directly from miners. And that's a huge deal because that means there's going to be less metal that'll make it to refiners and thus less metal available for LBMA and for COMEX. One other thing is that very interesting, back in, I think it was October, Russia announced that they were going to be purchasing other commodities, and the first one they named was silver. And I mean, the supply and demand is on a knife's edge. So you get, additional demand is going to blow up the supply. From a short-term, technical standpoint, we're oversold again. I mean, we've seen multiple times this past year where the metals bottomed. I posted, and I think Andy, you posted my charts also, showing the bottom hooks. And I think what that illustrates is exactly what Andy was talking about, central banks stepping up and creating demand for gold. Not so much silver directly, but silver's going to move with gold. So I think that is definitely significant. And I really don't think it's important. If you're wanting to know, should I buy at 29? Should I buy at 27.75 or whatever? Who knows? And when all is said and done, it's not going to matter. The whole idea is that you're getting your capital out of the system and into something that cannot bankrupt. Because when this whole thing goes down, mark my words, the great taking is very real. And a huge amount of people are going to be left with nothing.
Now, let's talk about the storm that's quietly building in the global economy, the looming debt crisis. Across the world, nations are drowning in debt, but few are in as precarious a position as the United States. Let's put this into perspective. In just the first 2 months of 2025, the U.S. Treasury has already spent a staggering $584 billion. That's the worst start to a fiscal year in history. Rising interest rates are only adding fuel to the fire, with interest payments on the national debt ballooning to unsustainable levels. In 2024 alone, the U.S. paid over $1 trillion in interest, just interest. And here's where it gets even scarier. This isn't just a U.S. problem. Many major economies, from the European Union to emerging markets, are facing similar challenges. Governments worldwide have been propping up their economies with deficit spending, but the returns are diminishing. For every dollar borrowed, less and less growth is generated. This isn't just economic mismanagement. It's a ticking time bomb. So what happens when the music stops? Rising bond yields could spark a cascade of defaults, collapsing the credit systems that underpin the global economy. In fact, some experts are warning that 2025 could mark a tipping point, a modern-day 1929 where debt implodes and the financial system is forced to reset. But wait, there's more. As governments struggle to balance their books, banks are taking drastic measures to reduce risk, prioritizing government bonds over private sector lending. This creates a vicious cycle. Businesses can't access the funding they need, economic growth stalls, and defaults begin to pile up. It's no wonder insiders like Warren Buffett are sitting on mountains of cash, while retail investors remain oblivious, chasing overvalued stocks. And yet, amidst this chaos, silver and gold stand tall as the ultimate safe havens. Central banks and institutional investors are hedging their bets with these tangible assets, recognizing their enduring value in times of crisis. But here's the big question. When this debt crisis fully erupts, will you be caught unprepared, or will you have already taken steps to secure your financial future? Let me know your thoughts in the comments. Are we on the brink of a financial reset? And while you're at it, hit that subscribe button to stay updated on this unfolding story. Trust me, we're just getting started.
Yeah, well, you had China telling us that they took 6 months off from accumulating metals, which really wasn't true. In fact, the import-export numbers showed anything but that, and they were kind of caught. You saw the same thing with Saudi Arabia. Saudi Arabia importing importing metals that again attempted to not be reported to the IMF, and the numbers are far, far, far in excess of what we are being told. Aside from that, we see, for example, as we've talked about on your show a bunch, I've had numerous confirmations from mining executives that have told me indeed that China's flying all around the world, mostly in South America, and buying up doré and concentrate from the miners directly, which is disintermediating the marketplace, and it doesn't get reflected in the price or calculated in terms of how much they're actually buying. And it's not just silver, it's gold as well, although 70+% of the silver they're using in industry is coming from concentrate purchases, where they're buying sludge in excess, in essence, rather, directly from the miners, paying more than the West will, sending it back to China and refining it. And so what we are seeing by all of these countries is a way for them to accumulate metal without it being cataloged or the IMF keeping track of it. And the PBOC is just a very small part of Chinese gold accumulation. The People's Liberation Army is thought to have as much or more as the PBOC because they are not required to report it directly to the IMF. Or as we were saying with the concentrate of the doré, if metal is purchased that is under the 999 or 995 purity, that's not reported. Or if it's being accumulated by proxy, if you will, by commercial banks on behalf of the PBOC, that's not reported. And the same thing is going on with Saudi Arabia, and the same thing is going on with India. These are very large state-sponsored sovereign wealth funds that aren't reporting it. The thing about what you're mentioning in particular is that the PBOC said we stopped buying gold for 6 months. In essence, they didn't. They just stopped reporting it and tried to hide it much more keenly, if you will. And I think it doesn't do anyone any good in a world where they're all racing to accumulate gold for some reason. Does it have anything to do with the Tier 1 revision? Does it have anything to do with all of the banks, what appears to be the central banks, setting the stage for maybe some sort of a gold revaluation? It doesn't behoove them to let the world know how much they're buying. And I think the import-export numbers kind of caught them trying to do that. And if that's what they're getting caught with, my guess is there's a whole lot more they're not telling us about in terms of the way that they are very privately accumulating things around the world so that it's not directly a state-sponsored accumulation, but doing so kind of on the sly. And I think that is one of the things that I would take away from 2024 as well. And that is that massive accumulation and trying their best to kind of hide exactly how much they're accumulating and producing, for that matter, as well.
When we think of precious metals, gold usually takes the spotlight. But what if I told you silver might actually be a better play? Let's break it down. Gold has always been seen as the ultimate store of value. It's the go-to asset for central banks, investors, and even nations looking to safeguard their wealth. But here's the thing. Gold's price has already soared in recent years, and it's no longer as accessible to the average investor. Silver, on the other hand, remains vastly undervalued compared to its potential. Silver has a unique dual role. It's both an industrial metal and a store of value. That means it benefits from two major trends. On one side, industrial demand is skyrocketing due to its critical role in renewable energy, electric vehicles, and advanced technologies. On the other side, silver's status as a safe haven asset makes it increasingly attractive in times of economic uncertainty. Let's talk numbers. The gold to silver ratio, how many ounces of silver it takes to equal the value of 1 ounce of gold, is historically high. Right now, it's around 80 to 1 compared to a long-term average of closer to 50 to 1. This suggests that silver is significantly undervalued relative to gold. If the ratio were to return to its historical norm, silver's price would surge dramatically. And here's something most people don't realize. Silver's supply constraints are even more severe than gold's. While gold is largely recycled, silver is often consumed in industrial processes and isn't recovered. Add to that the fact that silver mining production has been declining, and you've got the perfect setup for a major supply crunch. So, why are central banks accumulating more gold than silver? It comes down to tradition and market size. But institutional investors are waking up to silver's potential, and as this trend gains traction, retail investors will be the last to join the party, often at much higher prices. The real question is this: with gold already so expensive and silver offering such a compelling opportunity, why aren't more people paying attention? Could this be the sleeper investment that outshines gold in the next decade? Let me know what you think in the comments below, and don't forget to hit that subscribe button for more insights. The story of silver is just getting started.
I mean, we can sort of discuss details about how, for example, the stands for delivery on COMEX are just going on all the time. What does it mean? And all this sort of stuff. But the reality is that increasing numbers of central banks do realize that the risk in their reserves is in the fiat currencies. And so, in effect, they have been selling fiat currencies to buy real money, real legal money, which, the Romans first classified as legal money in 448 BC with the 12 tables. Admittedly, gold wasn't in it then. It was sort of, copper, brass type thing, and gold came later. But, and if you look at Diocletian's edicts, which I think were 305 AD, so 800 years after the first Roman laws came out, and you look at the prices, the maximum prices that were permitted under the edict, and we don't have slave markets anymore, so we can't compare them. But there are various, things like, army boots and greatcoats and togas and, beer was another one, where the prices actually today expressed in gold are really quite similar. And that's the whole point about, in money. The growth of above ground stocks has more or less kept pace with global population, averaging around about sort of 1.5%, 2% per annum. So it's not surprising that, there is a balance, if you like, in the whole thing, which means that the purchasing power of gold remains constant. All the other fiat crap, it just basically loses it and loses it and loses it. And it loses it. Normally it's an interesting one because the monetarists, they do understand the dilution, if you like, of purchasing power of a currency, which they call monetary inflation. That's one aspect of it. But the other aspect, which they haven't really grasped, is that it actually depends. The value of a currency depends on the faith in it. And it's that faith which is now being eroded. This is why I mentioned 27% increase in the price of gold, or put another way, the dollar in gold has lost a quarter of its value in the last year, whereas money supply has only increased 3%. What's that telling us? It's telling us that the dollar is actually on a very slippery slope. But the thing that's, sort of surprising in a way to some people is that the dollar is the strongest currency. You look at the trade weighted, look at the chart of it. It's got a golden cross under it. Dollar's going up. Yeah, of course it's going up because all the other rubbish is even worse. So, but measured in gold, here I am in the UK and we've got a new socialist government. Nobody here has really bought gold, but it's the one thing to have because sterling's going to go down against the dollar's going to go down against gold, interest rates, or rather bond yields, are going to rise, which is going to destroy capital markets completely. There's only one thing you can have when credit is collapsing, which is effectively what's happening, and that is gold. And I think that's really the outlook for 2025.
Let's talk about the biggest divide in today's financial world, the insiders versus the retail investors. While the average person is chasing the latest hot stock or cryptocurrency, insiders and institutions are quietly making their moves in a completely different direction. Here's the proof. In 2024 alone, high-profile figures like Warren Buffett and Jeff Bezos sold billions in equities. Warren Buffett, in particular, is sitting on over $140 billion in cash, the largest in Berkshire Hathaway's history. What does that tell us? Insiders are preparing for something big, something they aren't talking about publicly. And it's not just stocks they're exiting. Many of these insiders are funneling their wealth into hard assets, like precious metals. Now, let's look at retail investors. The average person is still riding the wave of market euphoria, pouring money into overvalued stocks and speculative assets. But history has shown us that when insiders sell at these levels, the bubble is about to burst. The question is, why aren't retail investors seeing the writing on the wall? Is it blind optimism, or are they simply unaware of the risks? Here's where it gets interesting. As insiders bail out of risky investments, central banks are stepping in to scoop up tangible assets. While retail investors focus on paper assets, central banks are securing gold and silver to hedge against the kind of financial instability that's becoming harder to ignore. And let's not forget, these central banks are doing this while quietly reducing their holdings of U.S. Treasury bonds, a clear sign of waning confidence in fiat currencies. But why is silver such a key part of this strategy? It's accessible, historically undervalued, and poised to benefit from both industrial demand and its status as a safe haven. Yet most retail investors don't even have silver on their radar. So here's the big question. Will retail investors wake up to these trends before it's too late? Or will they, as usual, be the last ones to the party? Let me know your thoughts in the comments, and don't forget to subscribe to the channel. In the next step, we'll uncover the warning signs you need to watch for a stay ahead of the curve.
Inflate, if you like. And we're now on the verge of seeing interest rates going into new highs. Not interest rates, sorry, bond yields. Interest rates will have to follow, I suppose. And that'll pop the bubble. So we've seen if you like, I think the best of markets, and I'm referring to equity markets, Bitcoin, all that sort of stuff, the stuff which really needs credit to inflate its values. I think those days are now dying, and that, I think, was the big feature of 2024. I think the other thing I would say is that as far as the bullion banks are concerned, gold rising, 26, 27% on the year shouldn't have happened when money supply increased only 3%. So what's going on? I think around here we know basically there's a decline, if you like, in the faith of the dollar. As I keep on trying to tell people, it's not gold going up, it's the dollar going down. But I mean, I think that's the stark reality. 27% increase or 26, whatever we end up with, whereas US money supplies increased by 3%. And this is telling me, anyway, that faith in the currency is really beginning to decline now. And I think that's probably the most notable development that we've seen in 2024.
Let's connect the dots. The warning signs are all around us, but are we paying attention? From economic red flags to insider actions, it's clear that a seismic shift is coming. Here's what you need to know to stay ahead of the curve. First, let's talk about inflation. While governments claim it's under control, the truth is far more complicated. Rising bond yields are flashing warning signs that higher inflation could return sooner than expected. When that happens, interest rates could spike, making debt even harder to service. Remember, the U.S. alone spent over $1 trillion on interest payments in 2024. What happens when this cost becomes completely unsustainable? Second, look at the global shift away from the U.S. dollar. BRICS nations, Brazil, Russia, India, China, and South Africa are accelerating their de-dollarization efforts. They're building reserves of gold and silver while conducting trade in their own currencies. Central banks in these countries are hoarding metals like never before, signaling a lack of faith in the dollar's future as the world's reserve currency. And here's the kicker. They're doing it quietly, bypassing traditional reporting channels to avoid triggering panic. Third, the stock market itself is a powder keg, with insiders selling off billions in equities and retail investors piling in. It's the perfect recipe for a bubble. And bubbles don't pop gently, they burst, leaving chaos in their wake. The retail investor euphoria we're seeing right now mirrors past crashes, from the dot-com bubble in 2000 to the housing market collapse in 2008. The insiders know what's coming. They're preparing for it while the average investor is left exposed. Finally, let's not forget about silver. This metal is the quiet player in all of this, sitting at the intersection of industrial demand and financial security. While central banks focus on gold, silver's supply constraints and rising demand in technologies like EV and solar power make it the sleeper asset of the decade. The current prices don't reflect its true value, and once the market wakes up to this fact, we could see explosive growth. Here's the big takeaway. Whether it's inflation, de-dollarization, or the stock market bubble, the signs are clear. The question is, are you ready to act? Let me know your thoughts in the comments, and if you haven't already, hit that subscribe button. In the next step, we'll bring it all together to explain why silver might be your ultimate safeguard in the turbulent times ahead. You won't want to miss this.
I mean, I've seen it all going back to, I was a broker during the 87 crash. So, I watched the reflations, I watched the credit bubbles, I watched the credit bubbles blow up. And we are in a global credit bubble not ever seen in the history of man. And I would just tell you that all credit bubbles blow up throughout history. I mean, you can go back hundreds of years, and every credit bubble ever has blown up. And that's where we're headed. I do want to mention, as long as we're talking about the stock market, you mentioned Warren Buffett. Warren Buffett, I mean, I can remember back in 1998, 99, people were saying, Warren Buffett's washed up because he wasn't buying the dot-coms. He was raising cash. He had a huge amount of cash going into 2000, 2001. And of course, the market cracked. Same thing happened again in 2007, 2008. He was raising cash, and he now, I think the number is 145 billion in cash is what he's sitting on. And that is the largest amount of cash outright, and the largest amount as a percentage that Berkshire has ever held. So the reasoning behind him raising cash, and I mean, he says this himself, is that he can't find anything of value or of good value to purchase. So cash is a better place to sit. Now, I do believe that when this does go down, Warren Buffett is going to find out that he's sitting on the wrong type of cash, because ultimately gold and silver, they are real monies. And historically, you went to cash for safety. And if you've got a credit event happening, how safe are some of these sovereign debt securities going to be? I think we're going to find out that, not everything's AAA rated, not everything's safe. And we're going to find a bunch of sovereigns that get discounted and downgraded, maybe even completely.
So after everything we've covered, the soaring debt, insider moves, central bank strategies, and silver's untapped potential, the question remains, why is silver poised to shine brighter than ever in the looming 2025 crisis? Here's the reality. The financial system is teetering on the edge. Central banks are hoarding gold and silver, quietly hedging against a dollar that's losing its grip as the global reserve currency. Insiders are fleeing overvalued equities, signaling a lack of confidence in markets. And as we face rising inflation, ballooning debt, and geopolitical upheaval, The need for tangible assets has never been clearer. Silver stands out as the linchpin in this unfolding narrative. Its industrial demand is set to explode, with industries like renewable energy and electric vehicles consuming record amounts. At the same time, silver is being recognized as a safe haven asset, accessible, undervalued, and uniquely positioned to weather economic storms. Supply constraints are tightening, reserves are depleting, and mining production simply can't keep up. All of this points to one thing: a major price surge could be just around the corner. But here's the most compelling part. Silver isn't just a hedge, it's an opportunity. Historically, the gold to silver ratio shows that silver is significantly undervalued. If that ratio moves back to historical norms, we're talking about exponential gains. And as more investors wake up to these trends, the window to act is closing fast. So what's your move? Will you wait for the crisis to hit? Or will you position yourself now while prices are still within reach? Remember, this isn't financial advice. This is a wake-up call. The signs are all around us, and those who prepare today could safeguard their wealth tomorrow. If you found value in this breakdown, be sure to subscribe and join the conversation. Let's navigate these turbulent times together.